Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, I'm Sandy, your guest host from Keller Williams Legacies here to provide you with insights sourced from reputable news outlets to help you stay informed.
Steve Hamilton here. This is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
All right, Steve, let's kick things off with a study that shows an interesting trend in the housing market. More first-time homebuyers are entering the market, but they're taking their time with the actual purchase as prices are showing signs of decline.
Yes, Sandy, it's an intriguing situation. According to a recent survey from Royal LePage, while declining interest rates and a softening housing market might seem like the perfect time to buy, many first-time buyers are choosing to delay their purchase plans due to economic uncertainty. It appears that they're not in a rush, even though the conditions could be favorable.
It makes sense, though. Annalise Cugliari. Allegretti, Royal LePage's Vice President of Research and Communications, mentioned that the desire for property ownership in Canada is still strong. Many young people have seen the financial benefits that their parents and grandparents have gained through real estate investments. The dream of homeownership is definitely alive and well in Canada.
Absolutely, Sandy. And with the Bank of Canada cutting its key interest rate to 2.5% earlier this month, it has made variable mortgage rates more appealing. However, fixed mortgages are influenced by bond market yields, which still affects buyer decisions. Despite these favorable conditions, many prospective buyers, about 13%, are aiming to make their first purchase within the next 2 years. It's clear they're taking a cautious approach.
That's right, Steve. The survey also highlighted that 51% of first-time buyers are doing their homework by researching neighborhoods they can afford, while 49% are browsing online listings. It's interesting to see that 19% are actively viewing homes in person, and another 19% are engaging with real estate agents. People are really making sure they're informed before making such a big decision.
Indeed, Sandy. It's a smart move, especially given the typical budget range for first-time buyers is between $500,000 and $750,000, according to 55% of the real estate professionals surveyed. Another 19% say it's between $300,000 and $500,000. Buyers are weighing their options carefully, possibly prioritizing smaller properties or considering locations further from city centers to get more space for their money.
And it's worth noting, Steve, that while many buyers do rely on family assistance for their first home purchase, 51% of respondents said they won't receive any help. On the other hand, a significant portion will get financial support in different ways, like lump sum gifts or loans from family and friends. It shows the diverse strategies people are using to achieve their homeownership goals.
Exactly, Sandy. With 29% receiving a lump sum with no repayment expected, and others getting loans or having family co-sign their mortgage, it's clear that first-time buyers are leveraging every resource available to them. This comprehensive approach, combined with thorough market research, puts them in a strong position to make informed decisions when they finally decide to enter the market.
Let's transition to the current state of Toronto's pre-construction condo market. Rochelle Younglai from the Globe and Mail reported on a new government report suggesting that the downturn we're seeing is not quite as dire as it was during the 1990s property crash. The economy's stronger now, and there will eventually be demand for homes again.
That's right, Sandy. According to the Canada Mortgage and Housing Corporation, or CMHC, pre-construction sales are at a 33-year low, and some buyers are defaulting on their purchases. However, there are signs that buyers will return. This is largely because of the structural shortage of housing in Canada due to population increases and changing demographics.
It's interesting to see how the report compares current conditions to those of the 1990s. Back then, developers often built condo towers without pre-selling the majority of units, leading to a surplus of unsold homes. Today, developers need to pre-sell at least 70% of a building's units to qualify for construction financing. This requirement helps ensure that most of the building is sold before construction even begins.
And the numbers reflect this change. Mathieu Laberge, CMHC's chief economist, pointed out that in the 1990s, there were twice as many unsold units per capita compared to today. The stricter lending rules we have now, such as the stress test requiring borrowers to prove they can handle mortgage payments at rates higher than the market rate, have also contributed to a more stable housing sector.
Even though the stress test has helped banks, the report does highlight a significant issue. Many pre-construction buyers can't secure large enough mortgages to close on properties because their condos are now worth less than what they agreed to pay years ago. This has led to some buyers walking away from their deposits and developers taking back defaulted units.
It's a tough situation, Sandy. But, as the CMHC report noted, speculative building was more prevalent in the 1990s, contributing to overbuilding. Today, the market isn't assessed as being overbuilt, and the recent surge in condo popularity was driven by limited supply, strong immigration, and low borrowing costs. We were building in line with fundamentals, according to Mr. Laberge.
The report also touches on the slowdown's impact due to higher mortgage rates and expected changes in immigration policy. Currently, resale condo prices across the Toronto region are down 28% from their peak in early 2022. In comparison, during the 1990s slump, prices fell 43% over a similar period.
While these figures might seem concerning, the CMHC believes that the market will eventually recover as demand for housing increases. The structural shortage, coupled with the economy's resilience, suggests that the downturn is not permanent. It's crucial for buyers and developers to navigate these challenges carefully.
Let's dive into a significant transformation happening in the lending landscape. We're seeing a notable shift in the private and alternative lending sectors, which have gained traction as traditional banks become more conservative in their mortgage offerings.
That's right, Sandy. This trend is largely due to tighter mortgage underwriting standards, such as those set by the B20 guidelines. These changes have expanded the pool of borrowers turning to private lending, including those who might be considered near prime.
Jake Bannister from Glass Lake Funding mentioned at the recent Canadian Mortgage Summit that the profile of borrowers in this space is broadening rapidly. It's not just people with credit issues or unique properties anymore. We're talking about near-prime borrowers seeking flexibility and ease in underwriting.
Exactly, Sandy. One of the key points made by Armando Deseri from Alta West Capital is the importance of having a viable exit strategy for borrowers. Many are finding themselves in private lending for longer than anticipated due to economic uncertainties and qualification challenges with traditional lenders.
Taylor Lewis from Canadian Mortgages Inc. emphasized that while private lending is not meant to be a permanent solution, it's a necessary step for many given the current market conditions. He noted that the stigma around private lending is fading as professionalism in the industry increases.
That's a crucial development, Sandy. With more borrowers staying in private lending longer, lenders and brokers have a responsibility to ensure there's a clear pathway for clients to transition back to traditional lending options when they're ready.
Sebastian Cooperhouse from Sequence Capital highlighted the importance of fiduciary duty in this process. It's about matching clients to the right solutions and preparing them for eventual regulatory changes that might impact their lending options.
Aaron Dura from PHL Capital Corp. Pointed out the sector's sophistication has grown significantly. With institutional investors and major banks involved, the professionalism and credibility of the private lending space have increased, making it a more viable option for many Canadians. Sandy, let's shift our focus to the latest comments from Tiff Macklem, the Governor of the Bank of Canada. He's recently backed the fiscal shift undertaken by the government, emphasizing the need for tough reforms to boost productivity and real incomes. This aligns with the current administration's plans to focus on infrastructure spending.
That's an interesting development, Steve. Macklem points out that previous policies may have overly prioritized demand stimulation rather than structural reforms. The idea is to create a more sustainable economic growth model by investing in infrastructure projects like port expansions and liquefied natural gas terminals.
Absolutely, Sandy. Macklem highlighted that trade agreements and large-scale infrastructure are crucial for encouraging businesses to take risks. He sees these as essential government roles, creating opportunities for businesses to thrive. It's a shift from just focusing on short-term demand to fostering long-term economic growth.
And it's not just about creating opportunities, Steve. The economy's been feeling the impact of U.S. tariffs, particularly in industries like steel and autos. Exports took a significant hit, shrinking by 27% on an annualized basis in the second quarter. Macklem's comments come at a time when the economy is still trying to recover from these shocks.
Right, Sandy. The current Prime Minister, Mark Carney, has been trying to tackle these challenges by cutting taxes and fast-tracking major projects. He's also talked about investing billions in defense, housing, and infrastructure to counteract the economic drag of the trade war. However, these investments will take time to materialize compared to the immediate effects of stimulus checks.
That's true, Steve. Macklem emphasized that productivity gains are crucial for making life more affordable in the long run. The focus is on reducing the cost of doing business in Canada, which in turn can encourage private investment. This approach aims to create a more resilient economy.
And it's a challenging balance, Sandy. The government is facing pressures to address the cost of living while also trying to manage the federal deficit, which economists expect to reach around $70 billion. Macklem's support for the fiscal shift suggests he believes in the potential of these reforms to drive long-term growth.
It's definitely a complex situation, Steve. The Bank of Canada recently cut its policy interest rate to 2.5%, the first reduction since March. Macklem stressed that this decision was influenced by the uncertainty from U.S. tariffs and the need to manage risks carefully. It's clear that the bank is trying to balance inflation concerns with the need to support economic growth.
Exactly, Sandy. Macklem's approach highlights the importance of risk management in monetary policy decisions. As the economic landscape continues to evolve, the Bank of Canada will need to keep recalibrating its strategies to ensure stability and growth.
Now let's turn our attention to some positive news coming out of Peterborough, Ontario. The Government of Canada, together with the Province of Ontario, has announced a significant investment in affordable housing. This is part of a broader effort to tackle housing challenges across the country.
That's right, Sandy. The announcement involves the grand opening of 681 Monaghan Road, which will include the construction of 7 new housing units. This project is supported by an additional investment of $830,015. It's a part of a new 6-story development designed to support vulnerable populations in the community.
It's a promising initiative, Steve, with a total of 53 units, including 37 one-bedroom, 11 two-bedroom, and 5 three-bedroom units. This development aims to provide much-needed support for individuals and families facing housing challenges.
The funding comes from the Ontario Priorities Housing Initiative, which is under the Canada-Ontario Bilateral Agreement as part of the National Housing Strategy. It's impressive to see such collaboration between the federal and provincial governments. The total joint investment now exceeds $1.6 million.
Emma Harrison, Member of Parliament for Peterborough, emphasized that this project will provide more safe and affordable homes for the most vulnerable residents. It's about more than just building homes. It's about offering hope and a chance to rebuild lives.
And it's a great example of what can be achieved when all levels of government work together. Brian Saunderson, Parliamentary Assistant to Ontario's Minister of Municipal Affairs and Housing, highlighted that this project is a significant step forward for the community, creating stable foundations for individuals and families.
Mayor Jeff Leal of Peterborough also noted that the city faces significant housing challenges, and this development represents a major step forward in addressing them. By working with the federal and provincial governments, the city is securing the resources needed to build and repair affordable homes.
Bonnie Clark, Warden of Peterborough County, pointed out that as the population grows, so does the demand for housing. Developments like 681 Monahan Road are essential for those on housing waitlists and help increase the housing supply in the community.
This project is a testament to the power of collaboration and the impact it can have on a community. As we continue to build a strong Canadian housing sector, it's essential to work hand in hand with nonprofit organizations to bring down costs and build homes at a scale and speed not seen since the Second World War.
Indeed, Sandy. The National Housing Strategy is a 10-year plan to give more Canadians a place to call home, prioritizing those in greatest need. It's initiatives like these that contribute to advancing housing affordability and equity across the country. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.